So this video is going to be a little bit different. I am going to be bouncing in between a couple of hats. I'm going to go in between my business banker hat, my licensed banker hat, and then obviously my accounting hat, because I will be going over Navy Federal Credit Union's financial statement. Wanted to share with you guys a conversation that I had with someone who asked me my professional opinion on an I.R.A that they hold at Navy Federal Credit Union. So this is going to be a pretty thorough conversation. So this is not financial advice. I am just sharing my professional opinion that I shared with someone that asked me about their I.R.A. And quick background for those of you who do not know, I worked for the bank for many years on the business side. When you work for the bank is very like relationship based. So even though you are in the capacity of, say, business banking, you still have to have like a thorough understanding of all of the bank's products, because the bank works on cross-selling. So you have to, one,
know your damn role, and
two, know enough about other people's roles so that you know what you're talking about when you uncover a need, and then build relationships with your clients, build a book of clients, and then also have relationships with the other departments, because as you are sitting down and you're having financial conversations, especially with business owners, they have personal lives. And so within that conversation, something could come up like their mortgage or investments that they have in another bank, and it's your job to get them to the specialist in the branch that can help assist them if what they are being offered somewhere else does not work. So this is why I am even sharing this I.R.A conversation with you guys and had this conversation. The Federal Credit Union has been quite popular lately. So for those of you who do not follow financial news or have not worked in finance, I'm going to take you back to 2008. 2008, we all know that there was this mortgage bubble and burst, and history always repeats itself. So here we are.
you maniacs! You blew it up! Damn you! Damn you all to hell!
In 2008, the forerunner with the whole mortgage debacle, which was adjustable rate mortgages and stated income. And of course, that just didn't turn out well. Where they messed up, in my professional opinion, is outside of the whole stated income and that adjustable rate mortgage, they did not separate their mortgage division from their regular banking operations. And when the mortgage side tanked, the entire bank tanked. Now, this is why JP Morgan Chase is now on the West Coast. Prior to this, JP Morgan Chase was strictly on the East Coast, and they acquired Washington Mutual, and here they are. I used to work for Chase. Chase is who paid for me to get my licenses, my 663 and life insurance licenses. And so I said that to say, anyone that is looking for like a really dope business model, that's a business model that you want to take a look at. Chase is not the entity that paid for me to get licensed. It was Chase Investment Services Corporation. So what Chase did is they separated their entities and industries to protect all of their entities. I would definitely take note of that. So that's a little quick financial history. Now getting back to Navy Federal Credit Union. So credit unions are different than traditional banks. By traditional banks, I mean like your Wells Fargo's, your Chase, your Bank of America, those type of banks. Those are federally insured. And credit unions are a little bit different. So credit unions are established by creating a charter, getting a license, and going to the state or to the federal government. And they are created based on like a commonality. So school teachers have a credit union, police department has a credit union. If I wanted to create a credit union based on X bankers, I could do that. And credit unions are owned by their members. They always have like really amazing auto loan rates, great credit card rates, and it's just because they really look out for the members. And that's not to say that traditional banks do not. They just have like a different vibe to them. So yeah, so reiterate, I am switching in between my business banker hat, my licensed banker hat, and my accounting hat, and we're gonna get into these financials, and I'm gonna share with you guys what I found, because I think it's really important to know what's going on. And get your pen and paper. This is Navy Federal Credit Union's Statement of Financial Condition, and this is as of March 31st, 2023. They're looking pretty healthy. So cash and cash equivalents, they have $20,939,260. I'm not going to go through each section, but I just want to point out a couple of things. So cash, they're looking quite healthy. And then next, what they're listing is their loans to their members. And they have that broken down by consumer, credit card, mortgage, equity, and business. And then it shows on this section, net loans totaling $108,220,400. For those of you who are just now seeing a balance sheet or going over a balance sheet, accounts receivable is money that is owed to the entity. So this is money that they are receiving. Kind of like a little bit of strange wordplay, but that's what that means. So they have their accounts receivable, their mortgage servicing rights, their accrued interest receivable, fixed assets, deposits, other assets. So their total assets is $166,182,642, which is really great for a credit union. And I did check out some other credit unions, and Navy Federal Credit Union is, they've got a great team over there. So they're shout out to Navy Federal Credit Union. They're doing pretty good over there. Now, what stuck out to me on sticking on this page is what I mentioned in the visual portion of this video, and that is under their liability section, they have their deposit accounts listed, and 3 lines from the bottom, they have individual retirement accounts. Now, this is what stuck out to me initially because I'm coming from a more traditional bank, and I am used to traditional banks separating their entities so that they are protecting their entities. And with a credit union, because it is operating in a cooperative and this is their members' money that is being recycled over basically generations. For those of you who do not know, Navy Federal Credit Union was established around right before the Great Depression, and they either before or after, and they wanted to protect their Navy servicemen. So Navy Federal Credit Union is, in essence, old Navy servicemen's money that has been recycled through the members over a couple of generations. So now we are looking at liabilities. And so accounts payable, that's basically money that is owed going out. In total liabilities, they have, which is pretty low, they have $9,059,833, but their total in deposit accounts and liabilities is $152,860,170. And going into the equity section, their members' equity is totaling $13,322,472. Now, I want to bring your attention to this little box at the bottom that says delinquent loan information. And here it says current and less than 2 months delinquent, and it gives the dollar amount. And then it right underneath, it says 2 or more months delinquent. So my initial concern when I'm looking at this is that they have a pretty high amount of loans that are delinquent to the tune of $112,289,940, which is looking a little rocky for them. And so I wanted to point that out because I'm really interested to see how this plays out. And especially with this being a credit union, again, credit unions are not huge banks like JP Morgan Chase Bank. This is the money of Navy servicemen that have recycled their money through their members over generations. So I got a couple more seconds. I'm looking at the timer. So I am going to close this out